The Fed sets rates today, but the meeting could be overshadowed by the naming of the next chair. President Trump could name his pick for the next chair of the Federal Reserve as soon as this week, while Fed watchers will be listening especially closely to outgoing Chair Jerome Powell's press conference later, after the Justice Department opened a criminal investigation into him. The Fed's job could also be complicated by a slide in the dollar, which hit a 4-year low this morning. Chris Rossbach is Chief Investment Officer at J Stern. Chris, the market's not expecting a rate cut today, but should investors start to price in a push for easing under President Trump's pick for chair?
Well, I think the overall economic situation in the US looks pretty good, and the Fed has handled it very well. So I think consistency is important. And yes, the market is expecting the Fed to keep rates stable and to have a judicious outlook in terms of being ready to ease if necessary, also in response to what President Trump has asked them to do, but at the same time keeping the balance between growth and inflation, both of which are going to be issues this year. So I think the balanced outlook is something the Fed has done very well, and it's important to maintain that integrity and that independence.
Is the market confident, though, do you think, that that independence will be maintained under a new chair, given, of course, the investigation going on into Chair Powell and the fact that we know the president wants lower rates?
A lot of the stuff that's been going on has been unprecedented. But at the same time, I think what we've seen that in the US, what must happen will, and what can't happen won't. So we've seen a different field of candidates for the Fed chair. We've seen some people come in and out of contention. It's going to be up to President Trump what he decides. But the current field that's being talked about is largely experienced people, many of which have been Fed board members. And so while it seems clear that many of them have a dovish approach and that therefore we should expect the tilt to be towards easing, to being supportive of the economy, to being supportive of markets, I don't think at this point it looks like it is going to be something that is going to be highly disruptive. And I think we've seen this pragmatism take place, and I expect and hope that will be the case in the selection of the Fed chair as well.
We're seeing quite a fall in the dollar this week, which of course risks driving up import prices and inflation in the US. Could that reduce the odds of further cuts?
The dollar move is pretty significant. A strong dollar is something that's important. It's important for the U.S. economy. It's important for the outlook both on inflation and on rates. So it is quite striking, but the currency is really set by interest rate differentials and by purchasing power parity, so by fundamentals. And the fundamentals in the U.S. look pretty good. So I think the dollar has made a significant move. There's clearly some reasons for it, including the realignment of reserves, especially in China, other reasons related to the Trump policies. But it is trading at a very low end of a range. And so I think it's going to be a constraint. It's going to be a factor to be taken into consideration. It will constrain some of the options for easing into the year. But again, with a solid outlook for the economy, with solid employment, with inflation moderating, there really is a case for the Fed having done a good job. And I think those fundamentals are what should prevail.
It's also a very busy day for earnings, Chris. Microsoft, Meta and Tesla are all out later. I know you hold Meta. Are you keen to see its enormous AI spending turning into profits?
Well, we are. I think this is going to be all about growth, and it's going to be all about the guidance that they give on the cloud capex. We think that the computing capacity that is being put in place is not speculative. It's not looking forward to demand, it's in response to demand. We saw great numbers from ASML, which we own as well, which show just how much of spend is now going into increased capacity for semiconductors, and that's both at the high end and at the more commodified memory end. So we think there will be an increase in guidance of capex. We'd like to see 20% ad growth in the fourth quarter. We'd like to see 20% guidance for this year, so that would be very solid. If guidance for capex goes from the roughly 75 billion to the 120 billion that we're expecting, we think that's justified because they're making cash on cash returns. The Instagram in WhatsApp, Instagram is doing well. There's revenue and monetization opportunities in WhatsApp, in threads that they may announce. So we think there's a lot of good news to come, and it's going to be generating cash returns for the company that are going to translate into value for investors.
That was Chris Rossbach of J Stern. Don't forget, you can watch more videos on Reuters.com.